And here's more now from my exclusive interview with Anthony Scaramucci, former White House Director of Communications. I was able to get his thoughts on where he sees the greatest safety for investors during these volatile times. Does it lie in gold?
It's a near-term safe haven, but long-term it really doesn't solve people's problems. And so one of the things is that issue is that you've had fiat currencies effectively since 1971. None of these currencies are backed by anything other than the standing of that government. And so if you've got one government, the second largest economy in the world, starting to manipulate their currency, you could see exposure here for all fiat currencies where people start to lack trust in them. And so remember, all that is an instrument transfer of value pursuant to people trusting in it. But if I tell you that overnight I'm going to make it less valuable, and so even though you have $1,000 in your bank account, I've devalued the money, and that $1,000 only represents $500 worth of purchasing power, you start scaring people. You'll start seeing a migration into real assets and things like gold. But I just remind people that are investors of what Warren Buffett said about gold. All of the gold ever mined, you could put it in a cube. It's worth 10 Exxon Mobils and probably all of the farmland of the United States multiplied by 10. Would you rather have all of that productivity or this big lump of this heavy cube of gold? I would prefer to put the money or the capital into assets that I think are actually going to return something, as opposed to be waiting for other people to think it's more valuable than me in terms of where my entry point is. So I'm not super optimistic on it, but near term I can see how that will continue to rally.
Part of the reason I asked Scaramucci about gold was a recent tweet he had put out where he wrote, "A trade war transitioning into a currency war brings with it a full set of different ramifications. It exposes how corrupt fiat currency has been since Richard Nixon ended the gold standard in 1971. When trust fails, so do markets." So I asked Scaramucci, was this an endorsement for a return to a gold standard?
It's not an endorsement for a return of a gold standard, but where we have done our best in terms of global commerce is where we've had some agreements related to purchasing power parity. Where we're doing our worst is where we have people manipulating their currencies. And so what I was referring to from 1944 to 1971, the Bretton Woods Agreement, the post-World War II agreement, as it related to currency and economic transactions among the state powers, things were pretty fixed. When we were in the 80s, 90s, into the early 2000s, we had something called purchasing power parity, and even the economists used to say, okay, here's what a Big Mac costs in these different currencies to sort of show people that we weren't playing games with each other. What a country can do is they can reduce the value of their currency, which makes their exports more attractive to other nations. And so the Chinese did that. They linked their currency to the United States, even though their industrial output was growing and their currency should have gone up. The Germans did that. They linked their currency to the Southern European currencies, where there were weaker economies there and more trade imbalances, more deficits. And so the euro was effectively a 22% discounted currency, meaning if the Germans had to go back to a Deutschmarkified world, they would be selling goods and services to the rest of the world with a currency that's worth 22% more than the euro. And so what's happened here, and I think this has the president so upset, is that you've had mechanisms of currency devaluation to help the Chinese in places like Germany. The United States really hasn't done that. And so now we're in a little bit of a war, and you're seeing what these guys are doing. They're going to manipulate their currencies. Germany's weak economically. South Korea, you're seeing that data. That's not so great. Japan's data is not great. And so what I'm fearful of is the doctrine of unintended consequences, a full-blown trade war with the two biggest trading partners and the two biggest economies could touch off a unnecessary global recession.
Well, we hope you enjoyed our exclusive talk with Anthony Scaramucci. We'll have much more for you, so be sure to stay tuned to Kitco.com.